The risk trade might be back on. If you look at bonds and stocks, there seems to be a pattern emerging. Markets reporter Sheila Dharmarajan is here to explain. Sheila.
Well, good morning, Eric. We have been tracking the trends, and you start to see a pattern that investors are getting a little bit more hungry for risk these days. So first of all, let's take a look at the bonds market. High yield outperforming investment grade for the first time this year. High yield bonds returning 3.63%. Now, this is versus only 2.3% for investment grade bonds. Also, when you take a look at the leveraged loan market, now these are the really risky speculative loans reaching a 20-month high this year, Eric. Now, this is, of course, as investors are looking for more yield, potentially taking on more risk here, Eric.
How about equities, Sheila? Are we seeing some kind of risk appetite come back in the stock market as well?
You know, Eric, when you look at equities, it's a little bit more of a teeter-totter. Now, those are words that actually Brian Belsky from Oppenheimer uses. So on the one hand, when you take a look at market performance, S&P, of course, reached that 17-month high last week. Also, when you took a look at sector performance, you're seeing that the cyclicals are outperforming. So financials, consumer discretionary leading the way, while you have the defensives like telecom and utilities lagging. Also, another sign the risk might be on, we're seeing small caps outperforming this year. Russell 2000 up 12% versus the S&P, which is only up 4%. But economists I spoke to were a little bit more cautious when it came to the risk trade for equities. They say, yes, we are seeing some risk trades here happening, but they really categorize it as a trickle of risk more so than anything else. And they actually point out that investors haven't stopped looking over the hill yet, Scarlett. Sending it back to you.
All right. Thank you so much, Sheila, on the return of the risk trade.